Everyone, today we're doing an emergency upload because IRobot has just reported earnings, and after reporting earnings, IRobot is about down 20% in after hours at the moment of making this video. I'm making this video about 6:30 in the morning, so if you give the video a like and subscribe for that effort, guys, that'd be really amazing. But yeah, I'm making a bit of an emergency upload because IRobot is not a stock that I'm currently invested in, but it's a stock that I said I'm watching before, and it's down 20% after earnings, which is something that's happened quite a lot recently for IRobot. It's gone down after its earnings. And when we look at the stock chart now for IRobot, it's a pretty ugly picture. A big massive downtrend. And if we look at the stock chart, we can see that on the 23rd of April, this stock was $130 a share. Before earnings, it was $54 a share, and after earnings, it's now going to be around about the $43 a share as of recording this video. Now, that could change slightly because the conference call has not happened yet for IRobot. It's expected to happen before the market opens. So potentially, if depending on what happens on that earnings call, it could bring the stock down a little bit more. It could bring the stock back a little bit. I don't think it'd bounce totally back to where it was unless some amazing news came out, like Amazon was going to go buy the company or something. I think that'd be the only way to recover that 20% loss, really. But it looks like it's going to be opening around the $43 range right now. But like I said, we've still got earnings call just happen, so that could change a few things. But we'll see what happens from there. Now, if you don't know what IRobot is, basically it makes little robots that go around and hoover around by themselves. They've also got a lawnmower out, and they're also trying to bring a few other different models out as well. But it's kind of really going for that AI kind of being on its own. And when we look at home appliances, that's kind of the way that it's going, is that, you know, they're able to manage a lot of the household chores by themselves. And IRobot has continued to develop how they're doing. And with them continuing to develop what they're doing, they're kind of getting more intelligent, starting to map things out where to go. And that's kind of how they've carried on going at the progress and the growth that they have been doing on previous years. Now, why the stock is down mainly comes down to three key points that I put down. So when we actually look at the earnings report, like I say, the outlook got cut, and when we hear about a stock on earnings call cut their outlook, that's when we see a stock go down quite a bit, and that's what's happened. But the outlook actually wasn't too badly cut. Now, when we look at the revenue, that was only slightly cut from the higher end, so it was still in the range. It just, the top end was brought down a little bit. The EPS, that was cut a lot more than the revenue. The EPS was kind of not cut below what I was expecting, but it looks like it's going to come in the lower range that they offered. Now, IRobot, funny enough, raised their guidance earlier on this year, but now they've obviously gone back down a bit. But like I said, the EPS wasn't terrible because it was still in the lower range. They just pretty much said there's no chance we're getting to mid to high forecast, and that's why it dropped down. So that really surprised me with how much it dropped just on that news. And the main cause of this EPS miss is because of the China trade war. You could say that the economic conditions is slightly the reason why, but the main thing is the China trade war, because a lot of their products do get made in China. And at the moment, there's been a big, massive tariff slapped on IRobot. I think the tariff is 25%, which, as you can imagine, a 25% tariff is quite hard to manage, because you can't exactly pass all of that onto the consumer. They're going to have to take some of that hit, guys. And yeah, now that's the big, massive problem, is the China trade war. And potentially, if it stays how it is, IRobot might be able to manage it going forward. Like I say, if the China trade war carries on, the tariffs get a lot worse, then obviously that's going to lead the stock to go down a lot more from here, and that's something to be careful of. But then when we look at the positives of IRobot, is that they still reported 9% year-over-year revenue growth, which is fantastic. When we look at quarter on quarter with what has happened with this China trade war, that's still pretty good. The margins have still been pretty good, apart from obviously the tariff that's been on. The actual margins of making the product have been pretty good. So that's worked out for them, and that's helped recover some of these losses and not pull that forecast down as low. There's still going to be 10 to 11% growth on the revenue side. So when we talk about the tariffs, originally this was going to be something around the 14 to 17% mark. Obviously that's now pulled that down. But even so, this growth is pretty good growth, and because it's double digit, I class it as a growth company. It doesn't pay a dividend, so it does rely on its growth quite a bit, and that growth is still pretty good. Now, the one key indicator that really says to me how much is a stock undervalued is the PE and the history of the PE. Now, when I had a look at the PE history of this company, we are now by far trading at the lowest PE this company has been ever. And also the PE is normally above 30, so this PE is now below 15. So the PE is pretty much half what it normally is. So that's now, the PE is definitely starting to scream out to me. This is starting to get to a massively undervalued at these prices. And the last great point about it is, I've not actually put this down, but the management is pretty good at IRobot. And another thing is the balance sheet is a pretty good balance sheet. In fact, I'd call it a great balance sheet as well, which is fantastic. So when I look at this company right now, and if I'm going to start investing in this company because of this dip, one thing that I see is a 30 to 50% upside from these prices. And a lot of analysts seem to think that as well. Now that might change because of the outlook cut, and might come out and re-change how they think IRobot's going to do and change their analyst forecast. But from here, I see a 30 to 50% upside, which is a nice and healthy upside for sure, which kind of puts the risk to reward worth investing in. Previously, when people have asked me about IRobot, I've said, you know what, the company's slightly undervalued at these prices, but I only see a 20% undervalue, which isn't huge. So for the risk to reward here, with the China trade war, is not worth me getting in at these prices. Now that it's dropped another 20% and I can see 30 to 50% upside, that really starts now making me think it's worth getting invested in. Now, from my point of view, is that we are in earnings week, so there's going to be a few of these moves, and when a stock gets hit this hard, I don't see it recovering that quick, so it should give me a week, 2 weeks to decide if I want to invest into it. And I want to wait and see what other opportunities are out there, because if Microsoft drops 20% and I go buy this stock, I'll be like, I should just wait for Microsoft's earnings and see what they did. So I'm probably going to give it a couple of days before I do decide if I'm going to invest into it. But I am going to say that I have got money in the brokerage account ready to go and buy this potentially. So it could be one that I go invest in as well. If I do go buy this stock, guys, I'm probably only going to make 30% of my position, because like I say, while this China trade war goes on and the risk for tariffs to push this stock a lot lower, it could happen at these prices. At the same time, it is dirt cheap, so it might not go lower, but I'm going to kind of protect myself, because you never know what happens in this China trade war. You can't guess what's going to happen next. So from my point of view, I'm going to play it safe and probably not buy a huge position in case this goes down a little bit from here. But I do think at these prices, the risk to reward with the upside here could potentially be worth investing in. So if I do go buy a position, guys, I will let you know, but I think there is potentially good upside in this stock now at these prices, and I would rate this stock a buy right now. Like I say, I'll consider it and potentially make a move in the next coming week, 2 weeks. But if I do, I'll make a video about it and talk about the price I got in. So guys, I hope you enjoyed that little emergency upload about IRobot after the big massive earnings drop. After it reported earnings, really the big first standout one for me, one on my watch list that dropped absolutely huge, so that made it quite interesting, guys. So thank you for watching. If you could give the video a like, that's amazing. Subscribe if it's your first time watching, and I'll see you in the next video.